Good afternoon, everyone, and welcome back to the NWR Virtual Investor Conference Series 11. I'm your host today, Banjo Blake, and next up we have Veris Australia. Veris is Australia's leading provider of spatial data services. It provides services to both public and private sector clients across the infrastructure, property, resources, utilities, government and defence sectors. Veris's client list includes Australian property groups such as Stockland, Mirvac and Lendlease, and blue chip mining companies such as BHP and Rio Tinto. Joining me on behalf of Veris Australia today is CEO Michael Shirley and CFO Steve Harding. Thanks for your time today, gents, and over to you.
Thanks very much, Banjo, and thanks everyone for joining us today. What we will do today is we won't go back through the whole history of the Veris story and where we're at. We really want to talk about where we are today and how we're taking that strategy forward. In the presentation that we'll talk about, there's some appendices that have been attached in what's been uploaded, and that will give people who are new to the story some of the context and the history in the past, and we can explore that and other opportunities. So we'll just talk about what we are and where we're going forward. Veris, as we touched on in the introduction, is a very simple, pure play spatial data services business. We are in a unique position now from where we've been in history in terms of we're in a position where we're now regrowing the business. We've been through a rebuild, re-engineering of the business and restructuring over the last couple of years. And we're now in a position where the year-on-year revenue and earnings and margin growth are growing. We're now fully funded with a strong balance sheet, and Steve will touch on some of those financials that really lets us invest in our strategy and take our business forward. We have a national footprint and a strategy to execute and utilise that across the country and really build on our local knowledge and working closely with our clients. We've worked hard in the last 18 months to refine and reposition our strategy to take us forward. And we'll talk about how that differentiates us in the market and where we end up. And we've got a really strong, committed pipeline of work, and we'll talk through how that operates and that transition for us as a business and where that's taken us. So we think we're in a position to really leverage this strategy, and we're starting to show how it works, how it grows the business, and how it's returning us to profitability, which has been a journey for the Veris over the last couple of years. So if I come back to the strategy, I think it's important for people to understand where we're taking this strategy and what we are not going to be through that strategy. It's important that we stay focused on our elements of that strategy. The original genesis of Veris was about being a national surveying business in a highly fragmented market that is also very large. The unique positioning of being a national surveying, planning, digital and spatial business gives us a footprint and an ability to work with big clients across the country, share our equipment and our people, and really take a higher position in that market. And we've worked hard to build that basis. That is the core of what we want to be as a spatial data business. It leverages off that national surveying presence. That alone, though, I think, misses an opportunity to enhance our profitability. And we've built alongside that, has started working on much stronger, what I would see as a professional services approach. It's about working with a core group of clients. It's about focusing on our people and taking a differentiated position into the market that's moving us up the value chain and letting us to earn a higher margin, higher position, and good ongoing work with our clients. So that's been critical to us. And then the unique opportunity that a business such as ours has is what value can we extract from our data? And our data strategy is all about leveraging from the data we collect, the data we're able now to hold, and how we solve problems for clients and how we extract value from that data. And we're in this unique position where we collect the data, we can now hold the data in our own platforms and provide our clients access to that data. And from that, we extract value. And for us, that is where the margin is. Be very clear, we don't see ourselves as a software business. We see ourselves as extracting value and innovation and insights from that data and using our platforms to host it. We work a lot harder about how we get paid to collect it and then how we get paid to provide insights from that data. And that is really what is a spatial data business. We're getting a lot more from that than just being a base surveying business. So it's been important for us to take that position and put it out into the market and move forward. One of the things we've been able to talk about over the last year has been what our strategy would be. I think it's important now to touch back on what that strategy is and how we are executing on that and making significant progress on that strategy over time. The positioning of us as a people business is absolutely fundamental. We've been working hard to build our staff engagement, our employee experience. It's all about holding on to the best people, retaining those people and attracting the best people. We've got a strong recruitment and talent development focus. We're really working hard through our own young professionals program to bring more people in, and that's been critical about building our own capability, our own capacity as an organisation, and bringing our people into the market. Our key account focus has been a key part of that professional services approach that I touched on earlier, and it's something we started 2 years ago. We started with a small group of key clients, and we're really focused on building the relationships, committing to the delivery, and we're starting to see the real return on that area of the business for us. And it's been a really important area. You think about 40% of this year's revenue will come from that small group of key clients. And that's representing a year-on-year growth of over 30% for that group of that area of revenue, and a higher margin work because of how we're able to win that work and carry it into the next project. So it's been critical to us. The other element is around our spatial data strategy. We've made significant progress in this strategy. We are not coming out to the market now saying we're going to take the cash on our balance sheet and use it in a loss-making R&D sense. We are out there delivering on this strategy, making money on this strategy and growing our revenue. Our data as a service suite, including 3Sight and Vantage, is now being used on projects with our clients. It is earning us revenue, building our margin. We're really proud of the role we're playing in Indigenous participation in our industry. Our alliance with the Woomera Group has been a fantastic success, both in the market and with our people internally. It's been a meaningful way to contribute to Indigenous participation in the spatial industry. And we've worked really hard within the alliance to win work together, to deliver work together, and it's been really successful in that sense. We're also using it to build capability from young Indigenous people, bringing them in to the industry in a traineeship program. We're doing that through recruiting Indigenous surveyors and building from the bottom up a credible position in this market, which is really unique for people. And it's building us great engagement with our existing staff base. And then finally, I think part of where we've been doing is repositioning the skills and the capability of our board to help us execute on that strategy. So David Murray joining a year ago brought in strong experience out from professional services and audit base. We've now got Tracy Gosling joining the board. She brings digital and spatial capability and an experience in commercialising digital strategies, which is right in the forefront of where we need to execute as a business. So that board participation and engagement has been a big step forward for us as well. I'll just touch on that piece around the clients. The clients we have as an organisation these days, they're blue chip clients. They are across the sector, across different sectors that give us defence about how we operate and riding the ups and downs of the market, but they're government, private industry, blue chip clients, and that's the place we want to operate in, and working hard across all of the sectors of our business. Steve, I might hand over to you now to just talk about some of our financial highlights and the balance sheet.
Yeah, thanks, Michael. And I guess as Michael's touched on, as we're delivering on that strategy and executing on the plan that we mapped out some time ago, we've been pleasing to see that we're crystallising that through revenue and margin improvements, as particularly now as the operating conditions around the country have started to normalise, and we're getting back to a bit more of what we used to know pre-COVID. What we're seeing there is sustained growth quarter on quarter in our revenue from commencement of FY20, so that's going on 18 to 21 months now. We've experienced that. That's from a year-to-date basis to 31 March, we're 15% higher than we were this time last year, and March on a standalone basis was 25% above where we were 12 months prior. So all that's delivering higher EBITDA margins, and we're sort of 40% above where we were for Q2 in FY22. So that's all leading into to where we see the 30 June year-end result being continued improvement on what we've delivered the last couple of years, and that's all based on further strength and continued growth in that order book and pipeline that we're seeing, and it's continuing to grow quarter on quarter. If I just touch on the balance sheet, we're now in a totally different position to where we were historically. We've got really strong balance sheet, strong cash balance, no corporate debt, and that'll give us the ability to continue investing in our technological offering, particularly in our digital and spatial service lines and as a service sort of product. It's giving us an ability to improve and leverage our efficiencies in our operating model around equipment procurement, our vehicle strategy, and how we negotiate with a bunch of our suppliers and vendors and partners, and it also just provides underlying strength in our balance sheet through any further periods of uncertainty, such as what we've seen in the last 18 to 24 months. So really strong position on which to continue delivering on this strategy.
Thanks, Steve. One of the areas operationally I think it's worth touching on is the strategy making us more money? Steve's talked about the fact that our revenue is growing month on month and has done now for a good period. Our digital and spatial business is growing its revenue. They're more than 50% up on their budget for the year. They deliver high, strong margins growth over the period of the 2 years that we've been executing on this. And they're also a higher margin business than our base surveying business. So thinking back to the strategy of how we build on those three layers, a core part of that is getting into our digital strategy will deliver us more margin. And we're showing that our digital and spatial business is doing that. At the same time, we're showing revenue growth in our profitable regions in the past of Queensland. We've turned around our Sydney business that 2 years ago was a really problematic part of the business as we started that rebuild, and been able to turn that business around by 200% and building the gross margin. And areas like Tasmania that through the previous 12 months have been relatively free of COVID until sort of the last couple of months, that they've shown how the strategy works and our ability to grow revenue and margin when we've had a clean run at things, as we had in Tasmania, has been a really strong performance area for us and showing us the benefit and the strength in the strategy and the model that we have. One of the things we've put a lot of effort into for the last couple of years is getting some transparency in our pipeline and talking to the business about pipeline and understanding where our workload will come from. We've been able to report on that consistently over the last 8 months. We've shown that our secured backlog has grown every time we report on it, continues to grow and be in excess of $50 million. And our weighted pipeline of future opportunities, detailed ones we're tracking, of over $190 million. So once again, getting to record levels for us as a business. We've had strong project wins over the recent period in mining and resources, transport, property. I'll just touch on defence. This is a client that was a zero revenue client for Veris in the past, put effort into it through our key account program. And over $3.5 million of recent project wins with defence is showing the benefit we can get through that focus and building for us a really strong recession-proof client base and understanding where we see the outlook of our business being. For us going forward to finalise, we think we're very clear on our strategy. It's refined, it's making great progress, and we're showing results. The core of that strategy is about delivering sustainable profit that gives the business sustainable dividends. And we think we've got a strong balance sheet that's letting us deliver operational savings. We've got a positive outlook over the next 3 years. And we've shown that this strategy does improve the business and is delivering as the way we set it forward. So thanks everyone for your interest and happy to take any questions.
Thanks a lot, Michael and Steve. It was great getting an insight into Veris and the path forward. Just got a few questions lined up. First, we'll start off with, are there any plans to return some of the cash to your shareholders?
That's a good question. And it's one we've been asked, since the Acura sale completed. We feel very strongly that our commitment as a business, as I'll leave it on this slide, is about delivering sustainable profit, and then we use that to deliver ongoing sustainable dividends. And we'll be talking about what that dividend policy would be going forward, but it's got to be based on sustainable ongoing profit. And that is where our credibility comes from. Secondly, that cash on the balance sheet, and as Steve talked about, we've been able to leverage that into significant ongoing operational savings. And we see that there's more value for shareholders in the business in giving us that resilience and those ongoing savings as part of this profit return. An example of that for us is the vehicle fleet leasing that Steve touched on. You know, we're just finalising those new approaches at the moment. We see that that gives us ongoing savings of over 10% for our vehicle fleet, which is a large efficiency gain for us that delivers ongoing returns for shareholders. So we don't want it to be a lazy balance sheet. We're getting value out of that balance sheet, and we see that that delivers longer, better returns for our shareholders rather than a one-off payment.
Thanks for that, Michael. Moving on to the next question. What traction are you getting with cross-selling from your traditional services to these higher margin spatial data services?
Well, that's the key point in our strategy, and it's been really pleasing to see us starting to do that. So we've got jobs where we might be out in the engineering space, working on a large engineering asset, and we've been able to bring in our digital and spatial tech capabilities and then build in and hold that data for that client in 3Site, and excluding other competitors out of elements of all three of those. So for us, that's been a really positive opportunity. We've done that on a number of major infrastructure projects in New South Wales in recent times, where we've been doing the base surveying. We've gone back in and done laser scanning and drone work, put that data into 3Site and used our AI and analytics to extract the value from that. And what gets us to that position is by being in the front end and collecting that data and having that relationship with the clients. And we're seeing that building into some of the monitoring and ongoing work we're doing on these projects too. So that's why the base surveying business sits at the core of our strategy, because we can leverage out across that platform.
Thanks, Michael. Just moving on to the next question. Could you please expand on your comment about the spatial data strategy not being a loss-making R&D development?
Yeah, so look, if you look around the industry, and there's been a lot of noise over the last year or so about businesses saying we're going to go off and do this, we're going to spend this money, and we'll come back to you when we can make money with it. What we've been doing, over the rebuild of the business has been building that capability around our digital and spatial strategy, and we're now in a position where that is delivering revenue for us. It is delivering higher margins for us, and it is helping us grow the business. And we don't see that we need to take that cash on the balance sheet and erode that while we build that capability or outcome. We're delivering that now. We also understand that with history, we haven't had credibility to come out and say what we might do. So we've known that we had to be there and executing on that strategy and having it grow revenue and grow profitable revenue, which is where we're at.
Michael, Steve, thanks a lot for your time. That concludes our session for Veris. Appreciate you guys giving us a look into Veris and the path forward.
Thanks for your time and thanks for the interest.
Thanks a lot, guys.